once again, look at the XRP chart on the daily time frame. And you can see we've done some work on this chart already. We added some support lines, we added some resistance lines, we added some trend lines, and we also added the Fibonacci retracements. Last week we also had a look at the EMAs. I have removed them for just to have a clearer view of the chart. Today we're going to look at another indicator being the RSI, the Relative Strength Index. Select that, close the menu, and you'll see here on the bottom of your screen the RSI window has opened. RSI is something used mainly by people that trade. RSI is a lagging indicator. So you will hardly read the future from this indicator. I will tell you what happened, what direction the market is going into, and most importantly, it will show you the levels where a token is actually overbought or oversold. A few traders have their own numbers. Most common for this would be the 70-30 rule, which means 70 is overbought, below 30 is oversold. You can actually go here to the side and scroll up and down for the full spectrum. It goes from 0 to 100. Let me just put it back up there just to give you a more visualized experience. Now, for me personally, I like to say the 75-25 rule instead of the 70-30 rule. It just gives me that little edge, that 1-2% more. If you can see here, all that green, that means, yeah, here it was seriously overbought. People were buying XRP, and yeah, you can see also it broke out and went all the way up. The same RSI followed suit. Once it comes above 70, yeah, traders here will stop buying. This is then the retail that keeps buying. Once again, if it goes below the 70 line, that's where most traders will exit the trade or sell because it is, it's clear the trend is going down. Vice versa, when it goes below 30 or in my case 25, and I see a sharp curve to the up, that is for me then, confirmation that we are in an uptrend and it might be time to buy. And I rather buy between 25 and 30 than buy at 40 or 50 when it's a neutral territory. It's just those few extra percentages that you can gain on your trade by using this indicator. If the RSI stays above 40 when it's going down, that means, okay, the trend is still healthy. It's still an uptrend possible. Didn't go below 40. 40 is so what my personal threshold that I look at. If we go below 40, that means, another dip is incoming. If it stays nicely above 40 and holds, then for me, there's nothing going on. It's in neutral territory on the daily. You can also use on the 1 hour. As you can see, there's a big difference between the 1 hour and the daily. On the shorter time frame, you see here it's been oversold. And this is where traders start to get back in. Of course, they want confirmation of the trend, so they will use also other indicators to see where it's going. Like the RSI is reactionary, it's a lagging indicator. It will not tell you where the market is going. It just follows the movement of the market. But you can use it for overbought or oversold. That's for me, I use like the indicator 30 seconds a day. I'll look at it, okay. I see on the 1 hour, I'll have a quick look on the 4 hour. Okay, agrees, we're getting, actually, it is a nice time to get into a trade or to buy. That's what the RSI says me. I'll, of course, would love to get more confirmation of that. And then I'll look at some other indicators to work with this. We'll go back to the daily, and in the daily we'll see, okay, longer time frame is in a slight downtrend, but still in neutral territory. And then people will zoom in and see here, Okay, we're in the neutral territory. We are slightly going up in the shorter time frame. Now let's look at the EMAs, and that's where traders will make a decision. That was the RSI in very simple layman terms. I hope you liked the video. Give us a like, give us a subscription, and especially leave a really nice comment for me below. Thank you for watching. Bye-bye.